the show right now. Kunj, hi, afternoon. Just looking at the prospects of the pharma universe, the fact that Auto Pharma has also now joined the list of movers from perhaps last year, the likes of a DRL, Cipla, etc. Anything interesting that you find within the pharma pack, and what could lead to this rebound?
So let me start with second part of your question first. What could lead to this rebound, or rather what have led to this rebound also? One, of course, we know that we are at an index level which has been holding after a sharp rise in April and May. The rise hasn't been there for last 1 month or so, but still the large cap index is holding on to its gains, not falling down, not going up. Mid cap, small cap continue to participate. And in that process, we are obviously seeing a lot of global money coming in into India. Now, in such a situation, it always so happens that after an initial part of rally and participation in relatively undervalued stocks with good financials, the incremental money starts to look for new sectors and stocks, which is where I think pharma has come into the picture. The sector, as we all know, has been a non-participant for last actually so many years, probably 4 5 years or so. It has been coming up, going down, but hasn't been seeing consistent performance. So I think that's the reason we are seeing the buying interest slowly coming in into the pharma stocks. In terms of the financials and fundamentals, of course, the results have been showing slow and steady improvement. The US sales for the industry as a whole still continue to be a slight pain point. The US FDA issues are more or less under control, so that's no more an issue, and domestic sales has been picking up. So that's where the whole sector is poised currently. I think in terms of investment opportunity, India oriented India, the companies whose sales more than 50% comes from Indian market are the ones which will continue to do well.
And I think perhaps that's the reason that Dr. Reddy's is also looking into tapping the domestic market. But in the meantime, Kunj, do you look at IDFC First Bank and AU Small Finance Bank closely? AU Small Finance Bank is in focus because they're likely to consider a QIP this week.
So I have not seen all these news flow, but yes, if I look at the banking sector numbers, more specifically for last 2 quarters, the quarters gone by, the March and December, there was a clear-cut improvement in general across the banking space, more specifically for the smaller and mid-sector private sector banks, both old generation as well as new generation. So there was an improvement in the loan growth, there was an improvement in the margins, and there was a reasonably good control in the asset quality issue, which used to be an issue till about 3 quarters ago. So that's what has led to the re-rating of the whole banking sector pack, more specifically, as I said, mid and the small caps. This is something that is likely to continue. Now, what we are also seeing is that looks like interest rates have peaked up. We have seen RBI putting on pause the interest rate hike for last two monetary policy committee meetings. So that's market is somewhere taking this as an indication that there will be no more hikes. Of course, there will be no more corrections also in the near future, but at least there is a clarity that there won't be hikes. So that's where the pricing in terms of assets and liabilities tend to move in favor of the banking stocks. So I think all these factors have come together to create a nice space for the mid-size banking space.
Okay, talking about banks, CSB Bank, that's the one which is in focus today. Let me take it across to Sharad and find out why is it buzzing and what's the dealing room chatter around it. Sharad?
Well, yes, in focus we are having CSB Bank, and what we are gathering from dealers is that HNI buying is being seen in the counter, with the volumes also coming roughly 3 times its 20-day average. Now, there are key investors already invested in the company, and it includes the likes of ace investors Kunj Bansal from Inam Group, and also small cap schemes coming from SBI Mutual Fund as well as Sundaram Mutual Fund. Now, looking at the stock, it's actually outperforming the Nifty PSU Bank constituents in the entire day trade, and also do remember the stock is up more than 40% over the last 1 year. In the valuations, 12-month forward price to book ratio is on the higher side, coming in at 1.24 times. But there are key triggers for the stock which is very important to track, and of course the street is bullish on the new CFO being hired in the name of Satish Gundewar. He was the ex-CFO at DCB Bank. However, there are concerns which brokerages have flagged off, especially on the non-gold business. Firstly, they're expecting that the NIMs would actually dip going ahead because of the contribution coming for the non-gold business, and also higher credit costs could be there. Another overhang in the stock could be that the bank itself is likely contender for the IDBI Bank as well.
Okay, so CSB Bank in focus on account of that, but as we are flagging out, it's a pharma stocks in focus. We spoke with the management of Fortis as well as Dr. Lal today. Listen in to what they had to tell us.
So there is no capping as such, but during pandemic or during special occasions, whenever governments step in, they cap prices. Like we have seen in COVID, they have capped the prices for COVID RT-PCR test. But right now, there is no capping as such. The expansion in terms of spending on, especially on healthcare, including diagnostic, has gone up. So industry size, industry opportunities definitely has gone up. Within that, specifically, if I talk about diagnostic, is more beneficiary because now the more and more tests are happening or people are more conscious about health. So I think overall industry is growing or should grow faster than what pre-COVID level. Last couple of quarters, we have seen that competition is not that aggressive, especially when we talk about new age players or e-commerce players. Uh, so I have seen that last couple of quarters, this is now stabilizing and not much aggression I have seen. Having said that, competition always there in this industry. If you see, we are the largest, we are the market leader. In spite of that, we don't have market share of more than 5-6%. So it's a very unorganized. We have seen competition earlier also, but this competition is was very different as we have seen in during COVID days. But right now, I think it is stabilizing and no more. It's like freebies or people were throwing hefty discount. I think there is price increase also taken by some of these players. So I believe now it is stabilizing here.
This facility wasn't performing up to our expectations, and then also, as we have said repeatedly, that the ongoing divestment is just part of the portfolio rationalization strategy. We want to deepen our presence in the clusters where we are strong and we have a sizable presence. At the same time, we do not want to persist with projects which are not performing too well. These two units essentially are the ones which we are immediately looking at. The others, we have a couple of other units which have been performing subpar, 3 more units to be precise. And those units, we are doing operational changes, we are adding new service lines, etc. And we are pretty hopeful that those would be turned around over the next 1.5 years or so. So I think this is where we would stop, and we would rather focus now on brownfield expansion and then opportunistically looking for further acquisitions as well.
Okay, that's the word coming in from the Fortis Health Management. Still pretty quiet on the index. Yes, we did try and make an attempt to claw back to that 18,700 print. Failed from there, though the Nifty futures have finally made it to that mark, but pretty lackluster there as well. It's actually Apollo Tyres which is a drag. Of course, there is Shree Cement as well. But let's just bring up that chart of Apollo Tyres right now in trade. The analysts meet takeaways. They expect the India revenue growth, which is likely to taper to mid to high single digits in FY24. They do see a moderation in the OEM as well as the replacement segments and lower exports as well. Talking about the European revenue, they are expecting flattish performance there, and raw material costs they are expecting also to be flat to higher sequentially for the first quarter of the fiscal. So that is what is lingering on the stock as well as we speak right now. But Kunj, just wanted to get in your perspective in the backdrop of the Apollo Tyres analyst meet takeaways and the kind of slowdown that they're hinting towards for their business in particular. How are you mapping the entire auto as well as the ancillary pack?
So if we look at the commentaries of the various companies, specifically in India, in fact, even some of the global OEMs also, and of course, if we look at the numbers, first feedback very clearly comes is that the supply chain issues seem to be reducing. They haven't maybe become fully normal, but clearly all the companies are giving information that the issues are normalizing. Specific to India, we already have order books, especially in the passenger vehicles. Two-wheelers is a space that continues to be challenging. Uh, Again, going back internationally, auto ancillary companies are having reasonably good order book from domestic buyers as well as from the international buyers. So I think the sector as a whole is right now placed in a very sweet spot. We have seen metal prices continuing to come down, both ferrous as well as non-ferrous. Oil price, the international crude price is moving in a range. So it hasn't been coming down, but thankfully it hasn't been going up also. So that's where we are again, as we were discussing earlier, interest rates seem to have peaked out. The correction hasn't started, but at least now, if there is any buyer who wants to buy a vehicle with borrowed money, he can plan with a reasonable confidence that his EMI, either in terms of the quantum or in terms of timing, won't go higher. So we should see the positive interest continuing to come in into the auto stocks, both OEMs as well as auto ancillaries. As I said, mainly backed by the expected improvement in the performance.
CSC ideas from our